Gautam Shah now, a technical analyst well known from Goldilocks. Gautam, I was speaking to a fund manager over the weekend and he told me that, this is the best time to get a technical view because it is difficult to justify, will the market top, will the market go up? What is your technical view on the market?
Good morning. Well, it's been difficult to justify based on many fundamental parameters for almost 6 months now. So in that sense, I think the disconnect has happened. But as you would have seen in the last couple of months, the news flow has got better and better, whether it's in terms of the GST collections or the company results. But I think from a charts perspective, it's all been good. It's been a nice, clean, structural uptrend that we've been in, making higher highs on a regular basis. And even at current levels, the market is actually not overbought because the consensus feeling is that since we've gone up so much, is the market a little top heavy? But actually, since the move has been so measured, it still looks quite okay. Also, if you look at the Nifty components, I think they are very well placed. I think we keep making the point about Reliance Industries, the banks and the IT index. If you look at them as specific pockets, I think they continue to be very steady. So our working target for this leg of the run remains around 16,000, which is a level where multiple technical studies coincide. So we will have to review the market action there. It's not very far away, but this is a target that we've maintained for a few weeks. And I think the bigger opportunities is in the bank Nifty, because there I think there could be a 10 to 12% upside. So those are the kind of opportunities that we see right now. And coming back to the Nifty, I think till we are above 15,340, all is well. We continue to ride this move with a sort of a trailing stop loss.
Right. So you mentioned about Bank Nifty. What will be your top picks within the banking names then?
Well, on the Bank Nifty, firstly, it's still in catch-up mode. If you look at many of the other sectors, they're already at lifetime highs, or 52-week highs, whereas the Bank Nifty is still quite far away from its own high. So there is a lot of catch-up to do, and I think 36,500 and 37,700 are our working targets on the Bank Nifty. And within the Bank Nifty, I think we've been maintaining all along that ICICI, Axis and SBI are our best bets. I think they could see significant upside even from current levels, and they seem to have taken leadership from an HDFC and a Kotak. So this is a trend that we've seen, and maybe an IDFC first might just be a dark horse, from current levels with very limited downside, but the upside potential is quite large from a medium-term standpoint.
What's happening, Gautam, right now is, autos, irrespective of the hit because of the second wave and, the commodity price inflation, that aside, a big shift within the entire auto pack with, some of the underdogs actually taking the lead. I don't even know if Tata Motors anymore qualifies for an underdog or not, but just previous years' history. But, re-emergence of Tata Motors, some of the auto ancillaries as well taking forth. The names like Maruti, which have been the leaders in the past, they are the ones which are actually taking a back seat. What are you reading within the auto space, and where is it that there is fresh trading opportunity here?
Well, if you look at the last 1 year, it's actually been the re-emergence of the Tata Group. I mean, there are so many stocks in the entire group which are up 2x, 3x, 5x, 10x. So it just tells you the kind of opportunity this group has, brought us in the last 1 year. And I think this is going to continue because the market is, loving the entire theme, and it's here to stay. Coming to autos, I think for a couple of months, just before COVID second wave, and as we got into COVID second wave, autos and banks were the two sectors that actually underperformed. So the auto index lost about 15% from the highs, and very gradually in the last couple of weeks, it has come back. We feel that this is again a large uptrend which is taking place. There is significant upside potential from here. In fact, the auto space has probably one of the best charts, sectoral charts in the market setup around, and our working target for that index is about 12,000, which is the previous high. So there are opportunities. We like the two-wheelers much better than the four-wheelers. So Maruti might just be an average performer, but Bajaj Auto, Ashok Leyland, very, very good setups, likely to do well. And Tata Motors has been a favorite for almost 8 months now. Again, it's a structural story which will continue. It went through a patch of consolidation, has broken out again in the last 7 days, and looking good for an eventual target of 380 to 400. So, one should just stay invested and ride the move.
Interesting. I just want to get back to the point that you were actually making on the entire Tata Group. Tata Motors aside, we've seen a big surge in Tata Steel. That's been sort of the leader of the rally in metals. Tata Consumer was, in that sense, a pandemic discovery. And, we've seen what has happened on Tata Consumer in that sense. But one is also seeing a move on Tata Power. Some of the underperformers within the Tata Group also play catch-up. Where do you think there's opportunity to trade afresh here?
Well, to be honest, the entire basket has moved up a lot. And at a 15,700 index, I don't have a good risk reward, to go fresh long aggressively at these levels. Maybe a Tata Power is still okay because I think it went through 10 years of underperformance. It doubled in a matter of 6-7 months, moved out of consolidation a few days back and has the potential to move towards a 150, 170. But otherwise, I think no other name is so well placed in terms of opportunity. But I think banks, autos, capital goods, I think capital goods is one space which I see as a major opportunity because remember, this sector did nothing for almost 10 years. If you look at it chartically, it was in a range for almost 10 years. So there is a lot of potential to move on the upside and L&T is clearly the leader and we've been talking about it at Goldilocks for quite some time now. And let's not forget the unlocked trade. I think if you have to play the hotel theme, it's Indian Hotels. Want to play the airline theme, it's Indigo, Entertainment, Delta Corp. I think these are wonderful themes which will do very well from a 6 to 12 month perspective and one should stay committed into them.
Right. You mentioned about the cap goods name. L&T has done particularly well. A lot of other cap goods, ABB, Siemens, they just don't correct. How would you look at the cap goods opportunity? Do you think one should move down to the mid-cap, road companies, select equipment companies? All of them can do well?
I would like to stay with the leaders. I think you are in a market environment where the quality is deteriorating by the day. We see that in the mid caps and small caps. I think grade C, grade D are now buzzing with activity. That's never a good sign. So at Goldilocks, we are trying to get into more and more quality stocks because, these are levels where the risk reward is not the best. But capital goods as a basket, I think I see a 15% upside on that index over the next 6 months, maybe greater. And as I said, because they are coming out of such a long period of underperformance, the scope for upside is substantial. I want to give you the example of Reliance Industries. Still a couple of years back, it was an underperformer, did nothing for a decade. And when the move started, it doubled in a value in a matter of 15, 17 months. Something similar might happen in the capital goods space. And yes, all the names that you mentioned, L&T, ABB, BEL, BEML, Siemens, all have great chart setup from a medium-term, long-term standpoint. So use all dips to buy is what my advice would be to your viewers.
What happens when a sector breaks out after 10 years? Capital goods you mentioned. Some of the other names, hotels I think also have not done well. They may not be an index sector to represent, but which are some of the other sectors which are looking interesting?
So I spoke about the unlocked trade. I think, as you rightly mentioned, every passing day, there is one underperformer which is breaking out. Some of it are quality, some of it are non-quality, but it's very important to, stick to the leaders in every space, every segment, every sector. So when you talk about hotels, clearly it's Indian Hotels. We've been talking about it for a couple of months, for now. And even at 140, I see great value because this is a sector, this is a stock which did absolutely nothing for years. And now there is serious HNI interest coming into the space. Charts are looking great. The downside could be about 20 rupees and the upside could be 100, 150, 200 rupees from these prices. So if you have to really play a slightly more long-term, horizon, I think the unlocked trade stocks make a lot of sense because hopefully COVID is done and dusted. That's probably the worst thing that could have happened to this unlocked set of stocks. And now as things open up and as the country opens up, hopefully in the next 1 week, I think these stocks will see significant action. You're already seeing Indigo do well. You're seeing IRTC coming back, another stock that we've been liking. And, Delta Corp as well is right up there.
Right. Do you think, the way the mid-caps have rallied, one should take a little bit of money of the mid-cap space or, still be invested in the mid and the smaller side of the market?
One should take some money off the table in mid caps and small caps. I think that's been the working view for the last 7 days now. We've changed our stance. In the last 3 months, it was all about broader markets, but now the action or the focus is shifting into the large caps. If you look at the NSE small cap index, it is close to lifetime highs. I think 96, 9700 is a number from where there could be some profit booking. And as I said, the quality of stocks moving, the kind of complacency that's there in the market, the fact that India VIX is at a level of 15, all of these factors suggest that the market is in euphoria mode. And the fact that, a lot of market participants are excited if circle filter changes happen. These are something which happens at a time when there is euphoria on the screen. So definitely a good time to take profits in mid caps and small caps and move to the top quality large caps.
Right. In terms of global commodity, what is the view you have? You think Brent can cross across much higher? You think steel prices, iron ore prices can continue to move the way they are?
Well, we've been watching NYMEX crude closely, and I think what has happened in the last 3 days, you have an important crossover beyond $67. Now, this is the level from where NYMEX crude corrected repeatedly in the recent past. The crossover has happened, and it does seem as if it will move towards a level of 75, 76. Now, theoretically, this might be negative news for Indian equities, but currently the momentum is so strong that people are, willing to just ignore it. But this is one key risk for the market, as I see, and I do see it going towards 76. But I think a lot of stocks, in the Indian sector, I think might just be benefited with this crude move. So do keep that in mind. Gold and silver among commodities is something that we've been bullish on for almost 15 months now. I think we are still at the tip of the iceberg in terms of the rally that has already taken place. And we do see gold moving back to 2070. We see silver moving back to $34, $35 once that level of $29 is crossed. And in terms of metals, well, I think it's a little overdone at these prices. I think they could be topping out at these levels, and that will be reflected in the Indian equities. So metals is an avoid. It was our dark horse space for 6 months, but I think it's now overdone. But one space that we really like, among all the sectors is the public sector enterprise. I'm very excited with the way stocks are behaving. Again, serious underperformance for a decade, but now coming out really well structurally, and we see a target of 4,000. So the entire basket, the OMCs, the ONGCs of the world, Coal India, Power Grid, NTPC, all look very good from a 6 to 12 month standpoint.
Sure. Okay, Gautam, great to have you on the show. Thank you so much, as always, for taking the time out.